Well, hello and a very warm welcome to our event on the ESM, 10 years of the ESM with Klaus Regling. Klaus Regling is the Managing Director of the European Stability Mechanism and has been and still is a pillar, as the name says, of stability, of the European stability of the Eurozone, of course. And Klaus has a very distinguished career. He worked in many different institutions. I met you, Klaus, 2008, when you were the Director General of DG ECFIN of the European Commission. And then you had several moves, including in Asia, and eventually took on the helm and the leadership of the mechanisms at the heart of the Eurozone crisis, trying to solve the Eurozone crisis and bringing the Eurozone out of very precarious state at the time towards, I would say, a much more stable situation now. So we want to hear from you because your term is coming to an end very soon, I think in 3 months, if I recall.
3.5.
3.5 months. So we want to hear from you how you have perceived this period at the top of the Luxembourg institution. What were the key issues you were focusing on? What were the key challenges? And of course, I will jump in. We want to make this as interactive as possible and sort of quiz you on various aspects, challenge you on some of your points of views. And of course, we don't just want to look back, but we also want to have a chance to hear from you about how you see the Eurozone and the ESM going forward. I mean, we are of course at a critical moment, and we will discuss about that as well. So perhaps we start really with the backward-looking part. Klaus, thank you again so much for being here. It's really great to have you and to discuss with you. Let me remind our audience, our online audience, if you want to ask a question, go on Slido and type in the code stability, and then you can ask a question, and I can see it here on the tablet. If you are here in the room, you actually have a chance to ask a real question with a real mic. But the world will listen to you, so it's going to be a real hybrid event. It's a real hybrid event. So Klaus, thank you so much for joining us. And please, I mean, what's your first sort of take on the first 10 years? It's been a very turbulent period, and what was the biggest challenge and what's the biggest achievement, perhaps?
Yeah, thank you very much, Guntram. It's a pleasure to be here, and I really wanted to come and say goodbye to you because your term is also coming to an end, and maybe I will ask you also a few questions about your 9 years here at Bruegel and 14 years in Brussels. In general, I agree we should mainly spend our time looking into the future. That's what I always try, not looking backwards. But I think on an occasion like that, it's good to start with that. And indeed, a lot happened during these years. It's still working?
Yeah.
Okay. The Euro crisis now seems far away because we are getting used to having new types of crises the last few years. And
the mic has moved a bit to the back. Katja, can you quickly support the mic? The mic has escaped to the back.
Yeah.
Which is sometimes happening.
Okay, we are able to solve even small problems. But we are getting used to having, unfortunately, more and more crises. I remember when we had the global financial crisis, which came before the Euro crisis, everybody said, this is the biggest crisis in our lifetime. Then with the Euro crisis, then the pandemic came, and again we said, this is the biggest economic crisis of our lifetime. And now with the war in Ukraine, let's see what we have to say in a while. But at the time, of course, the euro crisis was a real problem, very different from subsequent crises, and therefore also the policy response had to be different. And it was different because the nature of the crisis was very different, because there were real problems in a number of euro area countries that had accumulated during the first decade of monetary union. And they had to be corrected. 4, 5, 6 countries had lost competitiveness. They had huge current account deficits. The term sovereign debt crisis that is often used to describe this period is misleading, because Greece had clearly a debt problem, but countries like Spain and Ireland had no public debt problem at all when the crisis hit. So this term sovereign debt crisis is misleading. I prefer to talk about a serious competitiveness crisis, because that's what all the countries had in common. And those problems had accumulated during what was called the Great Moderation, the first decade of monetary union. Sounds like a bad joke with hindsight, but that's how economists called it, Great Moderation. People thought they had managed to solve all problems, no more cycles, no more macroeconomic issues. Everything was managed well by central banks and fiscal policy. And during that Great Moderation, we had the situation that unit labor costs in a country like Greece during those 10 years grew 45% faster than in Northern European countries. And that's why they had, not surprisingly, a huge current account deficit and also a large fiscal deficit. So they had to adjust, very different from when we entered the pandemic, where we talked about a symmetric shock, and there were no policy mistakes that led to that shock, and therefore nothing had to be corrected on the macroeconomic side. One had to deal with health issues, of course, many problems, but very different from the euro crisis, when real macroeconomic imbalances had to be corrected. And that's why the response at that time had to be very different from the response 10 years later. So conditionality that came with EFSF and ESM lending was essential. It was painful. It's always painful to make adjustments. But in the end, looking only at Greece, and somewhat small extent the same is true for Portugal and Ireland and Cyprus, because incomes had grown too fast, they had to shrink to some extent to bring them back to an equilibrium. So the country, people had to pay back what they gained too quickly the 10 years before. This is not popular. The ESM was never popular, and even today is not popular in some countries. But at that time, it had to be done. And the results were positive. These countries, after they finished their EFSF, ESM programs, had a better economic performance than the average of the euro area until the moment the pandemic hit. So I think the approach was good. We closed a gap in the institutional architecture of monetary union. There was no lender of last resort before the EFSF was created. That was a gap, because the founding fathers of monetary union could not imagine that a country, after taking the hurdles of joining the euro area, could lose market access. But that happens because of the wrong developments during the first decade. Then for my institution, I was asked to build up the EFSF. The idea was not to use it, that its pure existence would impress markets so much that it would not be needed. So my biggest worry when I accepted the job, which is now 12 years ago, was it could become boring after a year. Shows how wrong my forecasts can be. It became then very exciting, and we had to be ready within a few months to issue the first bonds in January 2011 to finance the program for Ireland. A new institution that issues bonds so quickly, this has never happened before in history. The EBRD needed 3 years, the AIIB needed 2.5 years. We did it in 7 months, and it was a lot of work convincing rating agencies, for instance, to give us a AAA rating. So it started very quickly. The first few years we had to issue then 60, 70 billion euros in bonds every year, which is not easy for a new institution that nobody knew. So my main job was to travel around the world to investors, and we talked about it earlier. That meant mainly going east, because the Anglo-Saxon world at that time thought that the euro would disappear the next 5 years. So I didn't need to go to London or New York. They did not buy EFSF or ESM bonds. And that was consistent with their expectations, so one cannot blame them. So I had to go to the Middle East and mainly to Asia. So many trips. It started immediately. And luckily, then big investors like the huge foreign exchange reserves that China has, that Japan has, but also sovereign wealth funds like in Singapore, they all started buying EFSF and ESM bonds after I met them several times. And the first few years we sold 40% of our bonds to Asian investors, which is a huge number. So that was a difficult beginning. Then other difficult moments were, of course, developments in Greece. The other four countries that needed our money all had one program, and at the end of the program, or even a few months earlier, they could exit. They had again market access, and after implementing reforms, had a good economic performance. Greece went through a more difficult phase, and we can talk about that.
Yeah, I mean, let's thank you for this first overview. I mean, let's zoom in on a few of those points that I think that you raised. I mean, perhaps we start with the more economic side and less with the ESM and the boring story, but really what happened in Greece and how the situation in Greece evolved, and what role the various players were also playing. I mean, so I think one of the distinctive features of these first programs was that they were run not by one institution, but by actually three institutions, by the so-called Troika, consisting of the IMF, the European Commission, and the European Central Bank. And the EFSF, the ESM, was the financing mechanism behind it, behind the Commission. But it was, again, yet another institution. And so one of the points of attention that we highlighted quite prominently in a report at the time with André Sapir and Jean-Pierre Zaniferi was that one of the issues the Eurozone faced was that there were so many players in this troika and so many different players all thinking different things about how harsh the conditionality should be, how much fiscal adjustment, how much austerity should there be. You just said Greece had to adjust, and I think I probably agree with that, but not everybody sees it this way, not everybody saw it this way. And so these differences in the view on how quickly adjustments should be done were quite an important part of the discussion in the early phase. Tell us what was your view at the time and how your institutions were playing into this institutional game, let's put it this way. What was your role?
Yeah, no, you're absolutely right. The EFSF in particular was only the financing arm. So the Troika was invented as something new, and everybody knew that would be a temporary group because there was no alternative. The magnitude of the task was far too big for the IMF. The IMF is not able to finance a country that is member of a monetary union and loses market access, because a country that's in a monetary union has so many interrelationships with its neighbors, with the other countries. Like Greece needed in the end from my two institutions more than 100% of GDP. For the IMF to lend 10% of GDP is already very, very high. And there was a lot of internal criticism inside the IMF from non-European countries to go that far. So the IMF only did 10%. They would have been totally unable to provide the money that was needed for Greece, but also for the other countries. That was ultimately the reason why Europe had to decide to create these institutions, because nobody else could provide the amount of money needed. With this innovative approach of guaranteeing the activities of the EFSF so that we could borrow at AAA interest rates. We pass on our funding costs to the countries, so very cheap money for them. By the way, that's an interesting number we just recalculated. The 5 countries that borrowed from us, the 300 billion euro we dispersed to these 5 countries, during the first decade, these 5 countries saved 110 billion euro in interest payments. Real savings.
So compared to which market price?
One has to estimate,
Right.
and in the beginning, of course, the spread between Greek market rates and AAA was bigger. Now it's smaller, but there's always a spread. Even today, it's around 3 percentage points. So Greece, even today, continues to save every year 5 billion euro. And this, in the case of Greece, will continue for another 40 years. And that's why we always said, after doing our calculations and after Greece implementing reforms and adjusting the macroeconomic imbalances, that's why we could claim that Greece is able to reach debt sustainability. Many people didn't believe that and say, how can they do that? They have a debt 200% of GDP. But the reason is our cheap financing. It's stable, it's always there. We don't run away in the next crisis. And the savings every year are tremendous. They're smaller for Portugal and Ireland, but they're also there. So that's part of the approach. And also, I think it's fair to say that without us practicing and implementing this approach, Next Generation EU would not have been invented. There was this experience that this approach, member states guaranteeing the issuing activity of a European institution, that this can be very productive. No direct budgetary cost, no taxpayers' money used. Like in the case of EFSF, ESM, we have never used any taxpayer money. The advantage for the borrowing countries comes from the fact that our member states take the risk. That's why we have a good rating. And the countries benefit greatly from the interest rate spread, and that leads to debt sustainability if they do continue to do their reforms. It's not automatic, but that's how it can work, and so far it has worked well. But back to your question, so we were the financing arm.
Yeah, perhaps just on Greece, because you mentioned Greece now several times, just to push you a little bit more on Greece. I mean, there was, of course, one debt restructuring in Greece. And so perhaps you can say a few words also on that, and your role and the ESM role or EFSF role in that.
Yes, of course, and that was important, the debt restructuring, and with hindsight it came too late. It was also a new approach, but it was the debt restructuring that we call PSI, private sector involvement. And this has happened many times over the last 50 years. I've been in many G7 operations, IMF operations, where private sector had to accept haircuts, and the official sector that normally does not accept a haircut is in exchange willing to provide additional fresh money from a public source, be it the IMF or credit insurance agencies now in Europe, EFSF, ESM. That's a very traditional division of labor. This happened in Greece. In Greece, the numbers are always big. We have lent them more money than any other public package ever made available. The PSI, the haircut the private sector had to accept, was also the biggest in history at the time. Private creditors lost 120 billion euro. And of course, that was the other factor that greatly contributes to the debt sustainability for Greece in the long run.
So coming back to the Troika, your role relative to, I mean, you're the financing arm, but what about creditor hierarchy? I mean, so there was always this question, if something goes wrong, who would have to take the hit? And the ECB was, of course, also exposed through different ways, but it was exposed. The IMF was exposed, and you were exposed. And so you all had different priorities. So tell us a little bit more about how the interaction between the various players.
Yeah. Well, the basic fact was that as we became, EFSF and ESM became the largest creditor in 5 countries, we had to add to our financing operations. We had to do what every creditor does who has a big debtor. These creditors check from time to time what the debtor is doing and what are the chances of being repaid. So that's when, over time, the Troika developed into a quartet. So we became a full member of the Troika, did not make life necessarily easier for Greece. As you said, there were already many actors. So then when the institutions traveled to Greece to negotiate the next disbursement, conditionality, there were then, after 2-3 years, there were 4 institutions sitting there. But this was unavoidable because our role is, I have to explain to my political masters, the 19 finance ministers of the euro area today, what are the risks of not being repaid by Greece, Portugal, Ireland, Spain, and Cyprus. So we have to make that analysis, and that's what we do. By now, of course, the Troika doesn't exist anymore. It was a temporary setup. Everybody was grateful that also the ECB was willing to play that role, which goes beyond its normal mandate. So the IMF played a small role in financing terms, but everybody was happy to have them there in the beginning because they brought the expertise of how to do it. But also the debt sustainability analysis of the IMF is very different from others because it runs for 10 years. IMF loans never run for more than 10 years. So
And your loan was 40 years.
and so we have a very different approach. And it's an approach that was required in the case of Greece. Otherwise, we couldn't see how to bring them back to debt sustainability. So that already explains some of the different attitudes among the institutions. But to make it clear, on specific items there were sometimes disagreements, but on the overall approach that a country like Greece had to adjust its competitiveness, its fiscal situation, there was no disagreement. And everybody who understands a bit how the IMF works knows that there's always the question of how much financing is available in order to spread out the adjustment. Greece got 100% of GDP. So to say we should have given them more time to adjust, and it was a lot of adjustments that was needed. But if it had taken longer, more money would have been required. And even if you have very rich friends, they may lose patience eventually.
That was indeed the big trade-off. How much funding can be made available, and how quick should the speed be? Let's talk a bit about you creating these institutions out of nothing at the beginning. And I mean, I think you already told us a bit about the importance of Asia, which is really a fascinating story, and I'm not sure it was actually told already, that story. So I think it's really interesting to hear how you managed to attract Asian investors, and why did the Asians in the end think, okay, here we put our money here, while the, let's say, New York-based funds or London-based funds were less convinced. So what was the trick? And tell us a bit more also about sort of this startup phase. I mean, creating these institutions and also convincing, of course, as you say, your political masters of the model and how the model would work. I think that was certainly a huge moment, and a moment where I think you experience also in the private sector, but also in the public sector, the trust that you enjoyed in Germany, in particular, was absolutely essential to get that thing going in the first place. So tell us a bit about this phase.
So the book that is in front of you, maybe you can show it.
Yes, let me show the book.
We issued that little advertisement here. But it's the only commercial. We published 2 years ago. This describes how the institution was built up from scratch, because when I was appointed in the middle of June 2010, there was a legal base for the EFSF, but nothing else. No staff, no office, no telephone number, no email address. So all that had to be created within a few months to be able to issue then bonds 7 months later. Otherwise, we wouldn't have been able to finance the Irish program. And let me add that, I should have said it earlier, I think if we had failed, I think some of the countries that are in the euro area today would have been forced to leave. So in a way, that is the biggest achievement. It's not only Greece, but I think certainly Greece and maybe one or two others. So it's not, as I still read quite often in the Financial Times, only the ECB and Mario Draghi with his famous words in August 2012. That was important to calm down markets, no doubt. But without our money, I think it wouldn't have worked. And to complete the story, there are 3 factors that led to this positive effect that all the countries could stay. It was the adjustment in the countries themselves. That's always the point I mentioned first. Because if they had not done the adjustment, if they were still not competitive today, if they were running large deficits on the trade and fiscal side, we would still be in the euro crisis. So it's the adjustment in the countries, ECB action, and the successful operation of my 2 institutions. So it was important to build them up quickly. And apart from going to find investors, mainly Middle East and Asia, of course, half of them came from Europe. I spent a lot of time going to national parliaments. You say I'm credible in Germany. I was highly unpopular at that time in Germany. The media, members of parliament, they were all very skeptical. Also academics. There was, I remember, an article written by 200 professors of economics in Germany, printed in the Frankfurter Allgemeine, that argued that the ESF was really a wrong institution to create. And I went to some public events where I had to argue with people like Professor Zinn, where I saw that 80-90% of the audience was on his side.
Yeah.
With hindsight.
I think I had similar experiences at the time, if I can say so. And perhaps just to say, I think in hindsight, it's very difficult to appreciate for those that haven't sort of lived actively through that period, how shocking it was, the change in the way the Eurozone, in a sense, was organized. I mean, people genuinely believed there would never be a bailout, there would never be a bailout clause, there would never be financial assistance, there would never be ECB bond purchase programs, right? There were so many things that were unthought of, unthinkable. And of course, Germany was a country where a lot of the resistance to these changes existed. And I think all the more important it was that you were there and many others sort of arguing with Professor Zinn and others.
And there was the perception that we would directly transfer German taxpayers' money to Greece. That was the widespread perception. Then over time, people realized that this was not the case. And over time, although with quite a delay, they accepted that there had been adjustments in Greece, but it took many years to convince the general public. I remember, for instance, when the 3rd Greek program was put together in the summer of 2015, you remember that there was a dramatic summit here in July where we got, I think, 5 minutes before Brexit, it almost happened, and then Tsipras turned around and agreed on a 3rd program, and we put it together over the summer, the conditionality and the financing. And then I attended a huge press conference in Berlin in September 2015 to explain that this 3rd program could work. And nobody believed me. Right. This is not so long ago. They were just very, very skeptical. These were all the journalists, and some of them are economists, but they were all very skeptical. So this has changed completely. Today, the ESM seems to be relatively popular in Germany, and that gives me some hope for the future in other areas where sometimes Germany creates problems, other countries create problems. Attitudes can change, and I've experienced it in Germany quite dramatically, how unpopular I was 10, 12 years ago. And today, when I go to one of the committees of the Bundestag, people are extremely friendly. From all parties, except maybe one, but all the other parties have something nice to say about the ESM and our work. So it has changed completely. So I think that's a good reminder. One should never give up hope, even if you want to solve a certain problem and it seems difficult. Different countries have different red lines.
Of course.
It's not impossible to change that.
No, I mean, definitely you are a very important pro-European voice in Germany, but since you mentioned popularity, let me bring in here one question, and that goes on the popularity of the ESM in the south of Europe, which I guess is not the same as in the north. So the person anonymous is asking, in your opinion, what could the ESM do to overcome the political stigma that is jeopardizing the institution in the public's eyes, especially in some countries? So perhaps you can tell us a little bit about, and that also is a moment, I guess, for us to switch to the more forward-looking part of our conversation. So the ESM still comes with a big stigma, and part of that stigma is still related, of course, to the very strong adjustment and very painful adjustment in Greece, but also in some other countries. And you say there were no alternatives, but of course, citizens living in the countries felt this as a very, very negative experience. So how do you see the stigma issue, and what's your approach to it?
The question was very precise, and therefore I like it, because it talked about political stigma. So the person, whoever it is, understands what some commentators don't understand. There's no market stigma related to ESM lending, and that's very important. The markets realize that the ESM is something useful, something positive, and it can be credit positive. Also, rating agencies have written about that, so it's well documented. So no market stigma. But, and as it says, in some countries, there's a political stigma. Interestingly, mainly in countries that never used ESM or EFSF loans. So it's Italy. In the other countries, when I go to Greece and Portugal and Ireland, as I have to do as the largest creditor, I don't feel any hostility. I think by now, of course, there are some people who really suffered, some lost their business, not only jobs, businesses had to close, and they are not happy, and I understand that. But overall, and certainly the political class understands that these programs were the basis for creating the positive economic developments afterwards. So I don't feel any stigma there. So interestingly, it's in some countries that never used EFSF and ESM loans, and there it was used in the past to create problems by populist parties against the government, and it's not easy to say what to do about that. I think time will tell. Also looking into the future, I think we don't know when ESM only now, ESM lending will be required, under what circumstances. Every crisis is different. As I tried to say very clearly, during the Euro crisis, we needed conditionality. One can always argue about details, but conditionality was absolutely necessary, otherwise we would still be in a crisis. When the pandemic hit, we also developed a facility based on our precautionary arrangements, which we have, like the IMF. They were not requested, but they played a positive role in the markets when they were created, because there was volatility 2 years ago, April, May 2020, and the Commission created the SURE program at the time. This was a few months before Next Generation EU. The EIB offered additional lending programs to corporates, and we created what we called pandemic crisis support. It had a positive impact, like precautionary arrangements are supposed to have. This had basically no macroeconomic conditionality. The only conditionality was that the money should be used for healthcare expenditures related to the pandemic. So very, very different from...
But politically, it was still not really possible to activate it or
Because
to
one
apply for it
country,
because basically one country, I would say, I can say
but in the
Italy was
future,
very skeptical. And perhaps you can say one word on the precautionary program. I mean, one interpretation was that, well, if a country goes for a precautionary program, it would actually at the same time then qualify for the OMT program if necessary. So this was the phase at the beginning of the pandemic, pre next generation EU, and so so perhaps you can say a word on this precautionary and the interplay with the ECB, and then we want to talk about the more recent developments of the last months.
So OMT was developed in 2012 after Draghi spoke in August, and this is a program that is accepted. You can find the details on the website of the ECB. It's part of their toolbox. Importantly, it has been explicitly accepted by the European Court of Justice as being compatible with the EU treaty and the prohibition of monetary financing. Because OMT, maybe not everybody is familiar with it, means that if there's an ESM program, then the ECB might decide, it's their decision, to really intervene only on behalf of one country that has an ESM program. So very country-specific interventions then are possible and allowed, which normally there are limits coming from the Maastricht Treaty and the fact that monetary financing is not allowed. And when we entered the pandemic, OMT had never been activated, but it's on one of the tools. There was also discussion whether our light conditionality pandemic crisis support would be sufficient for the ECB to use it as a basis for OMT. It never came to that because there was enough financing. No country ran into market problems. So we don't know whether there would have been a majority in the council to go that way. It's their decision. We would have been ready. But it's good to have that option. It would have been available in case of need. And in the future, because the next crisis will be different from the last few, there might again be something where ESM and ECB can work together closely to the benefit of the euro area.
Well, let's talk about that, and then I want to take more questions, also questions from the audience. But let's talk about the current situation. And there's a question here, of course, immediately about Italy and bond rates going up, going higher and higher. And how do you feel about this? And I mean, just to frame that question a bit broader, I mean, of course, today the European Central Bank is taking or has taken important decisions and will communicate them, I guess, in 45 minutes. And the ECB is now, with the inflation rate of almost 8% or 8%, is at a point where, of course, the period of very easy and abundant cheap money will come to an end. And the question is, as it does, as first the bond purchasing program ends, perhaps the reinvestment at some stage will end, and of course rates will rise, and we can debate how quickly that will be done, but at some stage this will happen in the coming years. You know, the worry is that this will not just affect the general funding rates, but also the spreads, right? And so basically risk premia will rise, which typically happens when you have a financial tightening. What happens is that not just the main rate increases, but also the spreads. I mean, all risk premia increase. And so, so in that situation, is there again a bigger role for the ESM? Can we expect that?
Well, the ESM is a permanent institution of the euro area, unlike the EFSF that was temporary. So the ESM will always be there. We have an unused lending capacity of 410 billion euro. So we are available in case of need. And by the way, pandemic crisis support is still available till the end of next year. We have precautionary arrangements which could be used in case the cost of the war in Ukraine become too big for some countries. We know that the cost just of the refugees in some of our Eastern European members, like the Balkan states, are very, very high. So countries that normally would not need any support, maybe they need support. We will see. This is very hard to predict, like crises are impossible to predict. The perception that I read often also in the media that now that the ECB takes the first few steps to increase interest rates will immediately lead to a debt crisis in Southern Europe is really absurd. It's really absurd. Greece, I talked about, they are not in any problem because most of the debt is with us and at AAA interest rates. Looking at Italy, that never needed public support from us and the IMF, not over the last 50 years. They have today a debt burden in their budget that's the lowest since World War II. In terms of GDP, they paid last year 3.5% of GDP on their public debt out of the Italian budget. 10 years ago, it was 11%. And today, even now that interest rates have gone up on Italian debt in the secondary market by about 150 basis points, today, when a 10-year Italian bond matures, a bond that was issued 10 years ago, and it's refinanced by another 10-year bonds, Italy saves additionally more money.
It's still cheaper.
Because 10 years ago, the interest rate was 6%, and that had to be paid for the 10 years. If it's replaced by a bond issued today, they pay 3.4%. So more savings. So the 3.5% of GDP interest burden will drop even further. So that will change eventually, depending how much the ECB will raise interest rates, but it will be a long time because the average debt maturity of Italy is 8 years. So I think one should be very clear about the time frame. To expect any debt crisis the next 2, 3, 5 years because interest rates go up is just totally unrealistic. But that does not mean, and that's of course the second part of my message, that countries with debt burdens above, let's say, the euro area average, there are 5, 6 countries that are clearly above 100% of GDP, they have to be careful because this debt increase cannot continue forever. There will be additional costs coming up from aging, from demographics, for the green and digital transformation. There may be cost of the war now. So countries have to be careful. And on top of all these extra costs which will come, every country should also create some fiscal space because there will be another crisis one day. We don't know when, we don't know where it comes from. And countries need fiscal space. We have learned that when a crisis hits. So there are very good reasons to be careful, but it does not imply that now an interest rate increase by the ECB leads to an immediate debt crisis.
No. So let's take a few questions from inside the room, and I will also weave in some questions from Slido. And so let's see. We have a question here in the front, a question there in the back, and here in the and Marie in the back. Yes.
Is this working? Yes. Okay. Thank you very much.
And please identify yourself.
Yes, I'm Olivier Martier. I'm a professor of economics at Sciences Po. I would like to make a comment on the book, which I had the pleasure to read again. I must say it's really gripping, and I hope to have a signature, if you don't mind, later on, because I didn't win the contest online, even though I answered the questions rightly. So this is a great read. I have 3 questions, actually. I'll keep it short. The first one is about the political stigma. Don't you think that a good way to overcome this risk would have been to force the 19 member states of the Eurozone to use the PCS tool, which in my view would have been a nice solidarity move? Another question is about the missed opportunity to make the ESM a permanent EU institution. I wonder what are your thoughts on that? And the third question is about the forthcoming roles of the ESM as part of its reforms. First of all, could you inform us of the next steps when the amendments to the treaty will actually enter into force, and how do you see the role, and specifically on which tasks do you see the ESM having a key contribution? Would it be debt sustainability analysis? Would it be the programs or something else? Thank you.
So let's collect. I know this was 3 questions, but I still want to collect a few because otherwise we will not have enough time. Guys,
Kurt Geisert, I'm one of the guides in the House of European History. Mr. Regling, my question is related to the last question of Mr. Wolf. We read in the papers that it's very difficult to find a successor for you. Do you think that this difficulty might have influence on the European stability mechanism as such?
Okay, so Marie in the back, and then you. Rebecca, do you want to ask a question, perhaps?
Yeah, hi, I'm Marie Lemuel. I'm a fellow at Bruegel and I work on climate policy. So my question is about, does your institution, or how does your institution think about, firstly, the damages from climate change? And do you think that would be a source of instability in the future? Are you relying on countries to be forward-looking and adapt? Or are you expecting them to kind of ignore the problem and face significant damages from extreme weather events, forest fires, floods, etc.? And then the flip side of the climate debate is about mitigation. And do you think, the current situation about the energy market might be telling us what the future might look like in terms of the decarbonization and whether that would create instability as well? Thanks.
Okay, so the gentleman there, and then Rebecca, please.
Hi, thanks a lot for the talk. My name is Friedrich Lucke. I'm an economic analyst at the Joint Research Center of the European Commission. And I have 2 questions. First relates a bit on the backward-looking aspect. The sovereign debt crisis in Greece, if we look back over the 200 years of sovereign debt crisis, was one with some of the highest output costs that arose during the course of the debt crisis. Do you think that the ESM could have done more to mitigate the collateral damage that was essentially caused during this crisis? And my second question would be more forward-looking. In the course of the Great Moderation, policymakers thought they had really figured out the economy and prevented crisis for good, or at least for a long time. Do you think that with the institutions we've created now, we are at the end of the line? Will this be robust to the next major crisis, or can you envision one unthinkable scenario in which even the ESM or additional institutions that we might create, such as the EFSF, are not enough to convince markets that debts will always be repaid?
Right, and let's take Rebecca Christie, who worked with you on the book.
Thank you very much. Yes, I had the honor of writing the ESM book in close cooperation with Klaus and the ESM staff, and it was a great experience, and I think the book reads okay. Klaus, I'm delighted to see you here, and my question for you would be, where does the euro area go with secondary bond market trading from here? We have seen a shift from a search for buy and hold investors, in a sense that trading is only for speculators, to a perception that you need to have liquidity for there to be market access. So how do we keep this moving forward? Thanks.
Okay, so this is, I guess, for another half an hour answers, but I hope you can sort of compress it.
Well, the good thing is we know we have to stop before Christina Gast begins the press conference.
Right.
So I'm glad I took note of all your questions. Political stigma, sure, if all the 19 member states had taken the pandemic crisis support, then would have been solved, but that's politically unrealistic. Countries like Germany, Netherlands, Austria, actually they can borrow more cheaply than the ESM, so why would they take it? So this was unrealistic. Permanent, what did I write here? I so many questions I cannot read my handwriting anymore. On the future role, you asked ratification. The ESM treaty is under ratification, and 17 countries have ratified already, 2 not, for different reasons. Germany, Italy. Germany, it's pending at the Constitutional Court, and they will probably decide the next few weeks. Nobody really expects a negative vote, and that would leave Italy, where the ESM has a political stigma. I hope that the parliament will still do it, because one of the major new tasks that the ESM would get with the new ESM treaty is to provide the backstop to the Single Resolution Fund. This is the next big step to the completion of the banking union. It's in the interest of all euro area member states, and the Italian government has made the commitment that they will get it done as soon as Germany has done it. So I'm optimistic here. Question about my successor. First, I'm still here for 4 months, so we are in no hurry. We had 4 candidates. The process started in the Eurogroup. 1 dropped out. We have now 3. They are all qualified. And there's great hope that at the Board of Governors meeting next week, Thursday, in Luxembourg. Board of Governors are the finance ministers, but they are called governors in the ESM context, that they may decide. But if they need another month, it's not the end of the world at all, because I am around. Of course, my staff is a little bit nervous who will come, because they are so used to me. But I always say it's also good for the staff. They deserve, after 12 years, a new boss who will bring new ideas and a new approach. Climate change. At the ESM, of course, we also begin to take it into account, because one of our tasks is to do a debt sustainability analysis for the 5 countries that borrowed from us. And I think whoever does debt sustainability analysis these days has to take into account possible cost of climate change. So that's very much on our work plan. And we are working together with the European Commission, as very often, but also with the IMF, to learn how they do it. And we learn all from each other. We don't need to reinvent the wheel, but it's clearly a task that is part of our work. Because instability indeed can happen if these problems are not addressed properly, and they may not be addressed fully the way that would seem advisable, and then one has to take into account the risks that can happen. Greece was the question. Indeed, Greece had the biggest drop in GDP of the 5 countries that were affected by the euro crisis, where we had to provide loans. But this, as such, is not surprising. It's unpleasant that it was so big, but it was higher than in Portugal, Spain, Ireland, or Cyprus. It's not surprising in the sense that the misalignments, which is a very polite word, through the massive macroeconomic problems that they had, were by far the biggest in Greece, bigger than in the others. I talked a little bit about in the beginning. We looked very closely at the numbers, and there are a number of slides on our website that demonstrate very clearly to what extent the competitiveness of Greece had suffered as a result of the excessive wage developments during the first decade of monetary union.
Including in the public sector, by the way.
Yeah,
I mean, in the Greek
absolutely.
public sector, salaries were rising in the first decade by 50% or more.
They almost doubled in the first decade.
That was completely crazy compared to the wage developments in the public sector in other countries.
Yeah.
So,
And then the private sector was catching up with the public sector. Actually, Jean-Claude Trichet, when he was president of the ECB, just to explain that we were not blind. I was in the commission and we had CCB. We saw these problems accumulating. And Trichet, in every monthly Eurogroup meeting, distributed a table that showed how the public sector wages developed in the Euro area countries. And Greece was always far at the top. The second highest was Ireland. The third highest was Portugal. And guess what happened with our programs? The first one was Greece, the second was Ireland, and the third was Portugal. There were reasons for the euro crisis. And it was not only debt. In other countries it was real estate. But the common factor in all of them was that their incomes had grown too fast. And in a typical country that has its own central bank, its own exchange rate, the way this is solved is by generating inflation through its strong devaluation. The devaluation restores competitiveness, that leads to higher inflation, that reduces real income. This way is not possible in a monetary union. The only possible way to reach the same result is a real cut in nominal wages and salaries and pensions, which is much more unpopular because people feel it more directly. But the effect is the same compared to having a devaluation and then higher inflation, which reduces real income to the same extent. And it's unavoidable once incomes have grown too much out of line with productivity. They have to be brought back. And so we invented what's now called real devaluations, which means direct cuts in nominal income, which according to most economic textbooks is not possible. I've talked to some of the authors of some of these textbooks to adjust their text. I'm still waiting for it. Mainly they come from the US because it happened in 5 countries, and actually interestingly it happened before the euro crisis already in Latvia, which happens immediately, or it happened actually during the global financial crisis, where this concept of cutting nominal income was first introduced. The IMF wanted to have a devaluation, the Commission resisted, and Latvia refused, and that was the right way. Otherwise, they wouldn't be in the euro area today. So they had to bring back also their income to an equilibrium. Therefore, on details, of course, in a crisis, mistakes happen, and I'm sure today we would do many things a bit different, but the overall approach to reduce real income was unavoidable. The one thing that should have happened earlier, ideally in Greece, was to have the PSI, the private sector debt restructuring earlier. It was a new instrument, had never been done in the monetary union, so that's why it came late. But the fact that people had to give up some of the income gains they had during 1 decade, not supported by productivity gains, was unavoidable. So not popular, but unavoidable. And I think the reward is that, and many people have recognized that now, unlike even 5-6 years ago, the Greek economy was doing very well till the pandemic hit, and even is coming out of the pandemic problems relatively well. There was a question about institutions. I think the last decade I often describe as a decade where the euro area created indeed many new institutions. It was not only EFSF and ESM, it was importantly the SSM, the single supervisor for systemically important banks. We had also the ESRB, we have EBA, IOPA, ESMAT. There are really many new institutions that didn't exist before the euro crisis. They are useful. They also help us to get through the current crisis, through the pandemic and the current problems. So that's good. But I don't really see a need for new institutions now. Now the need, and that's looking into the future, there's a need to complete banking union, to really make capital markets union a reality. Because when that happens, we would have a real single market for financial services, which doesn't exist today. We have in the euro area 19 national capital markets, not very productive, not good for the international role of the euro. Because when I talk with investors in Asia and they if they want to invest in every euro area country, they need 19 tax lawyers and 19 specialists for banking supervision, for regulation. That is not good for the role of the euro. And it's also not good for the intra-euro area risk sharing, so the cross-border capital flows, which is so important to avoid fragmentation.
But I mean, this point, I mean, relates to what Rebecca was asking about, essentially the secondary bond markets, right? I mean, so don't we need, and there's also a question here which asks sort of, do we need in the medium term some sort of a merger between the ESM and the next generation EU program or something of that sort? I mean, so don't we need, and sort of going beyond the day-to-day, if I may say so, don't we need at some stage this next step where we really create a deep European level or Eurozone level sovereign debt market, which has a safe asset, let's say, at the core of it? And whether that's the ESM or the Commission issuing it, I mean, that's now institutional questions, and one can have views on that. But sort of, don't we need to make that step, that political step, to really go beyond what we have currently, where we have sort of the ESM, and then we have a sort of an ad hoc next generation EU, which is a very different kind of instrument, of course, than the ESM has been. So where do you see this fiscal integration going forward? I mean, isn't that the core of the issue? And don't you agree that we are only halfway done the job?
No, it's a lot more. When I look at the monetary union today, what has happened the last 12 years, a lot has happened. And when you start from the beginning, we started with the euro. It was a big step for European integration to have a common currency. A huge amount of work, and I was involved in that in the 90s, working for the German Ministry of Finance. Huge progress. Then we learned that there were gaps. I think these institutional gaps have been closed to a large extent. Merger Next Generation EU and ESM doesn't make sense because it's completely different. Next Generation EU is not what we do at all. It's very important. I'm a big supporter of it. We actually help the European Commission a lot to issue all the bonds because they didn't have that experience, and we don't need our staff so much, so we gave it to them. But Next Generation EU has a very important task of stimulating reforms, of financing public investment. It's a steady support stream, and it works over 5 years. And that's more the work, when I look at the global scene, that the World Bank is doing globally. What we do is crisis management, ad hoc. There are many years where it's not needed at all. And then there's a time when a lot is needed. That's more like the IMF globally. And even there, sometimes people have argued that one should merge the IMF and the World Bank. It would be comparable to that. It would create quite a monster. Different from that is the question whether the ESM should be integrated into the EU legal framework. And that I'm in favor, but it would require EU treaty change, because then the ESM could get a position in the EU family like the European Investment Bank, which would be very appropriate, I think, where the member states have a lot of influence. The EIB also has its own capital, like we have we have the biggest capital of any international institution, 700 billion euro. EIB also has capital. They are active in the markets like we are, so that is the right model, but that can only be achieved with an EU treaty change. Beyond that, safe assets, I think, is an important topic, and indeed that after banking union completion, capital markets union, and also creating a central fiscal capacity for macroeconomic stabilization. Those are the gaps that one can fill without an EU treaty change. Then ultimately an EU treaty change where we should look at the governance of all these institutions, move much more towards qualified majority voting, as Macron and Draghi have argued the last few weeks. I'm in favor of that, but all that requires EU treaty change. We can integrate the ESM. And then with the treaty change, we would probably also move to a situation where the EU budget would get much bigger, financing common European public goods, like a common defense budget. And when we move that way, but that is for the long term, then there would also be the capacity to issue more safe assets in the markets, which would certainly also help the international role of the euro to be strengthened.
So I think we are coming close to the end, but you had a question for me also.
Yeah, absolutely. I mean, you're also coming to the end of quite a long term. Normally, people like us don't work for 9 years in the same place. For me, 12 years is also the longest ever. I had 11 years at the IMF, 11 years at the German Ministry of Finance, now 12 and a half years in Luxembourg. How do you see these 9 years? You experience the different crises from the angle of a think tank. Do you think Europe is moving in the right direction? And what are, for the euro area, the big gaps? Are those the ones I talked about, or do you see others?
No, I mean, I think I see it, of course, in many respects similarly. I think, as I quickly mentioned, I think when the Eurozone, I was, when the global financial crisis struck, I was still in DG ECFIN. And if I think back at what were the limits of the debate in 2008, 9, 10, and where we are now, I mean, the change has been absolutely enormous, right? Both in terms of the public debates, as well as in terms of, I would say, the debates among officials and leading politicians. So I think there has been a huge change, and a huge change in the direction of more integration, rendering this project more stable. I mean, that's very clear. Now, to me, I think the one next big frontier, so to speak, that I think we really need to talk about is, I think, as I mentioned, and I pushed you on this last question, I think there is the big question of further fiscal integration and creating of a safe asset. But I think that can only happen in a context where there is even more political convergence on major issues. And the one point I think in the current situation that strikes me that I think is really key is, I mean, we are seeing here the biggest attack on the global and the European Western democratic order by Russia, of course, which is a huge, huge attack, and so defense becomes even more important than it used to be, and relying only on the US will not suffice, at least under certain scenarios. So in that sense, my hope and my vision is that we have a more, let's say, forward-looking debate within the European Union on both what can we do to increase our mutual defense clause credibility, but perhaps even create some stronger European defense institutions. So this on the one hand, while on the other hand, of course, proceeding further with the fiscal and financial integration. So I think at the end of the day, we are at this point where the next steps on the financial and the fiscal integration crucially depend on the political, and the political very much will be linked to the defense side. So this is perhaps where I stand at the moment. And that's why I'm also quite excited in my next job in Berlin at the German Council on Foreign Relations. Of course, I do want to think about also the interaction between these various areas.
Yeah. No, it seems you picked the right place for that, because you have to bring it all together there, and not only worry about economic issues.
That's right. Thank you so much, Klaus, for being with us today and for sharing your insights. And congratulations again on a very important period at the ESM, a very successful period at the ESM. And thank you for taking the time to discuss it so openly and frank with us.
It was a pleasure.